Hey guys, Brendan here, and this is the weekly update, where I go over some of the biggest news stories from this past week that I find interesting and that hopefully relate to the overall goal of this channel. And for anyone that's new here, thanks for stopping by. On this channel, my goal is to help you reach financial independence and give you the option to retire early. And we do this by going over current affairs in the financial markets and to try to give you little tips to help you increase your income and reduce your expenses without reducing your quality of life. So let's get into it. As governments around the globe have increased restrictions on movement and social interactions, business activity in places like US, Europe, and Japan have collapsed. The data shows that these are the lowest business activity levels since October of 2009, and this is worse than economists predicted, which gives concerns for the second quarter. Now, there are expectations that there will be a relatively quick rebound, but obviously that depends on when the virus is contained, and really no one knows when that's going to happen. Now, personally, I'm not as optimistic as these economists. I don't think the business activity will bounce back as quickly as they say. Even once the virus is relatively contained, I think a lot of people are going to be really reluctant to go back to their normal habits from before the virus pandemic. I feel that some sort of social distancing, whether by personal choice or government mandate, will continue for a while. On Thursday, it was announced that 4.4 million Americans filed for unemployment last week. That brings the total up since mid-March when this pandemic started to around 26 million. That's a total of about 15 to 20% unemployment. As a reminder, in February, unemployment levels were 3.5%. Since the virus outbreak, about 1 in 6 Americans have lost their job. Now, economists do think that jobless claims will begin to tick down over time, but they do think it'll likely stay in the millions. To continue to combat this, on Friday, the government passed a $484 billion stimulus bill to give additional aid to small businesses, as well as give some additional aid to hospitals and for testing. This bill includes an additional $320 billion to the Paycheck Protection Program, the PPP loans. In the CARES Act, they gave $349 billion to the same program. Now, this is meant to help businesses continue to pay their employees. This new bill also includes $60 billion to the EIDL loans, $75 billion to hospitals, and $25 billion to help expand testing. Now, for any small business owners out there, if you've already applied for the PPP loan and the EIDL loan and you haven't gotten approved yet, there's no need to apply again. You'll be in the front of the line for these new loans. But if you haven't applied, then I suggest you go right now as soon as possible and apply. The PPP section of the SBA website says that they will resume accepting applications from participating lenders on April 27th at 10:30 a.m. Eastern Time. You should reach out to your bank to see if they are a participating lender and apply ASAP. The first time around, the PPP loans ran out of money and they were issued on a first-come, first-served basis. But this time, more people are aware of them, so there's going to be more competition and more people applying. So get your application in as soon as possible. The SBA website hasn't updated the section on the EIDL loans yet, but I'd check back as much as possible. I'll provide a link in the description below so you know where to look. Now, while that bill does provide additional support to small businesses, there is an expectation that there'll be additional stimulus to help Americans in the form of direct payments. Several new stimulus plans have been proposed, and I'll briefly explain 3 of the most popular ones. The first will provide $2,000 per month to each American older than 16 years old on January 1st, 2020, who's also making under $130,000 per year or $260,000 if married filing jointly. It'll also provide $500 for each child up to $1,500 or 3 children. Now, this will go for the period of 6 months and then has the option to be extended for an additional 6 months based on the unemployment numbers at the time. Now, I provide more detail on this stimulus plan proposal in a previous video, so I'll link that here if you're interested. Now, another stimulus plan that's proposed is that it will allow every American to forgo paying rent and mortgage on their primary home for the duration of 1 year. And the third stimulus plan provides every American, regardless of income, regardless of age, so you can be 3 years old or you'll be 100 years old, you'll still get this. It's $2,000 a month for the duration of 1 year, plus $1,000 per month for the following year. So if you're a family of 5, parents, 3 kids, you get $10,000 a month for a year and then $5,000 a month for the following year. Now, each of these proposals are in the very early stages, and personally, I don't see any of them getting past how they currently stand. Now, if any of them getting further along the process and become more serious, I'll provide more details so that we know exactly what to expect. But I think it's important to know what is on the table just so we can plan ahead. So speaking of stimulus plans, many Americans are still waiting to receive their $1,200 from the CARES Act that was passed 2 weeks ago. The good news is that a second big wave of payments is expected in the coming days for those that have recently provided direct deposit information. If you haven't yet provided your direct deposit information or you'd like to track your payment, you can go to the website www.irs.gov/EIP. Providing your direct deposit information is the best way to get your money as soon as possible. If you're waiting for a paper check in the mail, that could take up to 20 weeks to arrive. So on to other news. This past week, you may have heard that oil futures went negative, so they dropped below zero. That essentially means that they were paying people to take barrels of oil and store them. This is the first time this ever happened in history. But what exactly does it mean? Is it now free to go fill up your car at the gas station? Or even better, will they pay you? Well, unfortunately, no. With the virus, everything is slowed down. People are driving less, fewer flights are flying, cruises aren't going out, basically a lot less fuel is being used. This is really just an issue of supply and demand. With fewer people traveling, there's a much lower demand for oil. While this is great for the environment and great for our views of the mountains, it's not great for the oil industry. Because while demand has decreased, the supply has continued, so it's created a surplus. So to better understand this, let's first go over what exactly oil futures are. Basically, it's a legal agreement to buy or sell physical crude oil at a predetermined price in a future specified date. The seller of the futures contract is taking an obligation to provide and deliver the crude oil at the expiration date, whereas the buyer is taking the obligation to buy and receive the oil at the future expiration date. Now this is important because they have to receive this oil at that time. Now these contracts are agreed upon well in advance, so the buyer expected there to be a much higher demand for oil when these contracts expired. They thought they would be able to offload this oil much more easily, but now that demand is dried up, they aren't able to get rid of the oil and they don't have any space to store it. And it's gotten so bad that it's actually less expensive for them to pay someone else to take the oil so that they don't have to pay to store it themselves. Currently, because all of the oil reserves are filled up, they have to hire oil tankers to come in and sit on the shore and then store the oil there. And that's very expensive to operate those oil tankers. So since this all happened, oil prices have stabilized and oil is currently trading at about $16 per barrel as of Friday. But in response to record low oil prices, offshore oil drillers have begun shutting off wells in the US Gulf of Mexico, and some executives worry that the region's production may take years to fully recover. The offshore oil sector last year accounted for about 15% of US oil output. Also this past week, Georgia began opening some businesses at the order of Governor Brian Kemp. These businesses included things like bowling alleys and tattoo parlors. Now the response has been divided, including President Trump stating that he thinks they may have begun opening these businesses a little too quickly. And personally, I'm not sure why they chose to reopen tattoo parlors and bowling alleys specifically. Personally, when I go to a bowling alley, I feel pretty dirty when I leave, even without the virus going on. And many large chain retailers decided not to open their doors. Places like Macy's, Gap, TGI Fridays, and Best Buy. They chose to sit at the early phase of reopenings for fears of health concerns and uncertain customer demand. They stated that their reopenings will rely on state and local guidelines in addition to their own marketing analysis and consumer surveys. Some consultants have said that these large retailers aren't profitable if the number of shoppers allowed to enter their stores is restricted. Many also stated that reopening would add additional cleaning costs, and also they'd have to rehire many employees back. And rehiring these employees isn't as easy as it sounds, because many of them are on unemployment insurance. And in addition to the regular unemployment insurance, they're receiving an additional $600 per week for the first 4 months from the federal government. This means that many of them are actually making more money on unemployment insurance than they did when they were working. So they're not going to want to go back to work while this is the case. Now, personally, I found this response from these large retail chains to be very interesting. And it's another reason why I think our recovery may be a little slower than economists predict. Now, moving on to the housing market. Existing home sales has decreased by 8.5% this month from the same time last year. And this is the biggest decrease since November 2015. And this data reflects contracts that were signed in February and even January, before the virus paralyzed the economy. And really, housing prices haven't declined much from this because demand has also decreased at about the same level. The housing market was a little soft starting from the first quarter of 2018 all the way through the second quarter of 2019, but it was beginning to recover and pick up some steam because of the low mortgage rates. But the lockdown measures have derailed this recovery. And even with the Fed reducing interest rates close to zero, it's unlikely to boost the housing market because of high unemployment rates and faltering consumer confidence. And economists do expect home sales to rebound in the second half of the year as the economy begins to reopen, but they caution that it probably will not make up all of the virus-related losses. And another thing to keep in mind is that JP Chase recently detailed their new mortgage borrowing standards. And this includes things like you have to have at least a 700 credit score and put at least 20% down. Now, if other banks follow suit, then it can make it very difficult to get a mortgage, which could add further downward pressure on the housing market. And finally, this last piece of news might be the most concerning of all. Now, don't worry, things will get better, we'll get through it, don't panic, but let's get into it. Millions of gallons of beer stuck in concert halls, stadiums, restaurants, and bars are going stale. And this leaves the industry with a sticky problem: what to do with all this beer that nobody will ever drink. Now stop screaming. I told you this was the most distressing of all, but it'll be okay. The timing of the pandemic couldn't have been much worse for bars and stadiums. It was right before two of the biggest drinking occasion holidays, St. Patrick's Day and March Madness. Beer intended for those events is now spoiling and locked in those establishments, and breweries are trying to get it back so they can refill those kegs for when the lockdown is lifted. And draft beer typically stays fresh for about 2 to 6 months. Estimates are that roughly 10 million gallons of beer were abandoned in these establishments in mid-March. That's about 1 million kegs. And even more beer is stuck at distributors' warehouses. Unsold and expiring beer could cost the beer industry about $1 billion. And who ultimately pays for all this beer that no one consumed is another point of contention. Several breweries like Guinness, Anheuser-Busch, and Modelo have said that they would share the cost of the undrunk beer with their distributors to spare bars and restaurants from picking up the tab alone. Furthering the problem is that these restaurants and bars may have trouble getting rid of the beer. You can't just pour it down the drain because it adds to the pH balance of the local water supply. This reduces oxygen in the water and can produce undesirable bacteria. If you have any suggestions on how to deal with this expiring beer epidemic, let me know in the comments below. Also, if you have any other comments about any of the other stories we went over, you can let me know in the comments also. If you like this video, please hit the like button and subscribe. Also hit the little bell icon so you don't miss any future videos. Have a great week.